I guess one of the really headline items in connections reform was that we have a very, very large queue of batteries. NESO's numbers, when they came out with what they thought was needed for kind of the strategic alignment to Clean Power 2030, said we really don't think we need a lot of those numbers. I mean, out of interest, do you agree with those sort of?
We have a different number.
Okay. So, but effectively what we think that's going to mean is that there are a lot of battery projects that are not going to get a kind of a gate 2 connection offer. So we might see the pipeline of battery projects reduce. And I'm really interested in, does Modo are you modelling that at the moment? Are you thinking whether is it going to increase the value of the remaining projects?
So definitely we see this, right? So the projects that are going through that gate 2 process and that are protected, the 26 and 27 projects, we think those are definitely very valuable. If you then have projects which are in regions where it's not that oversupplied, but NESO and the Clean Power 2030 plan indicates that you need projects in those regions, again, you should feel quite confident. I would really sort of flag to people that if there's a need for 5 gigawatts of batteries in that region and you're the 10th gigawatt of battery in that region, there should be a warning sign going on that actually, even though, yes, we need more batteries, there's a very large potential that you could get given a very long date for your connection.
Even if you're protected.
Even if you're protected, right? And so there is going to be this, in the start of next year, when people start to get connection offers coming through. The point is that some of those sites will hold their value really well and some will be worth not very much.
Welcome to the Connectology podcast. I'm Hugh Taylor, CEO here at Road Taylor, and in these episodes, our grid connection specialists, the Connectologists, dive into the evolving grid connections landscape, often taking expert guests with them in order to discover, generate, and share insights that might just help you and maybe even industry as a whole to connect projects faster, at lower risk, and at lower cost.
Hello and welcome to another episode of Road Taylor's Connectology podcast. I am Catherine Cleary and I'm delighted to be joined by Ed Porter from Modo Energy. So hi, Ed.
Catherine, thank you very much for having me.
We are going to do a bit of a special on battery storage today, which obviously Modo does a huge amount of sort of analysis on. I think, is your job title VP of Insights?
Yeah, that's true. So always looking for insights. I think maybe the interesting part about that is as a company that originally started in Birmingham, now in London, but we're very much looking across many markets. So active, I would say probably in around 15 different regions, all across the US, UK, Europe, as well as Australia. So it's actually one of the real perks of the job is learning how all these systems work and being able to say, hey, this worked really well in GB, or this is working really well in SPP and in the US. And let's try and bring that out and put it into another region. That is one of the things that I really enjoy.
Fantastic. Well, and we are very grateful to have you and sharing some insights today. And I suppose a lot of people will know you as sort of a bit of the face of the Transmission podcast. But Modo Energy yourselves, I mean, you are basically data, really. Like, talk to us a bit about what you actually kind of do as a team.
Absolutely. So we're not a consultancy, right? So we spend all of our time looking at data, as you say, looking for those key trends, and we use that to kind of do 3 things. So we track how much money assets make in the market today. So we're looking at half hour by half hour basis across multiple markets to say, okay, this asset made this much money. We think that's really important, and so you can kind of track any asset in the GB indices. We also then build forecasts. So how much money will those assets make in the future? And that's to help people make an investment decision. So should I build a 50 megawatt, 500 megawatt, 1 gigawatt asset, and should it be 1 to 4 hours? And where in the country should it be? And when I'm negotiating all my terms, should I try and get 1.5 cycles, 2 cycles? All of those things, they all require data to make good decisions. So that the forecasting part is another huge part of the business. And then onto my section, which is the research. And so essentially we're looking for key trends that people need to know to make good de-risked decisions about investing in battery storage. We're also looking at solar and wind in terms of co-location with that battery storage too. So that third one is my area, so I know the most about it. But those are the kind of the 3 buckets that we look at. You also mentioned transmission, and it would be remiss of me to kind of not talk about it. So that is the podcast where we try and bring through really interesting thought leaders in energy to come on and talk about the things that we think should be platformed. So that is why you have been on as a guest before. But we, if you get the chance, then check that out, because it's on YouTube, etc., and you can take a look through and pick an episode you think sounds interesting.
Yeah, and I mean, I was just saying beforehand, actually, I feel like I have learned so much by watching some of those transmission episodes. So, and both about markets that we know nothing about, because you cover, Australia, the US, really quite different markets, and also stuff in GB, actually, where you've got, some incredible, really insightful guests. So I would definitely second that.
Yeah.
So I guess, so we thought we're sort of talking about battery storage today. And I think the first thing we thought was it would be quite good to have a bit of a sort of update as to where we are in the market today. What does the market for battery storage look like kind of in 2025?
Yes. So I'll try and put this kind of into three buckets, and I'd probably start off with scale. If you go back 10 years, a lot of the batteries that were on the system were in the sort of single digit megawatt type size, and that was big for the time. If we now look at sort of the biggest sites going around in the system, so if you go to sort of California, you've got Edwards and Sanborn, that's nearly a gig and over 3 gigawatt hours, right? So pretty large sites. You've then got things like Fidra's project at Thorpe Marsh, which is going live in 2027. That is 1.4 gigs, 2.8 gigawatt hours. You've got multiple projects in UK and Germany that are 1 gigawatt, 4 gigawatt hours. And so the point of sort of saying all of that is that we've gone from having like a blueprint of single digit megawatts to having single digit gigawatts in about 10 years. So there's been 1,000 times increase in the size of the thing we want to build. I also there's another great stat from someone we really admire, so the Romotion team. They talked about there being 550 gigawatt hours of battery cells produced in 2025.
Wow.
And so...
Worldwide?
Worldwide, this is, yeah. So sometimes we get asked things. So, for example, in the Maxa auction that happened in Italy, there's sort of 10 gigawatt hours of batteries going into that system. And someone says, oh, God, is the system going to sort of creak at the seams to deliver that? And in some ways, in delivering that into Italy specifically, yes, it will. But in the global context of how many cells get produced, absolutely not.
No, yeah.
And we see that reflected in the numbers. So if we look at California, so a market that we're active in, it's about 15 gigawatts of batteries that are live, and that's around 50 to 55 gigawatt hours. GB is around 6 gigawatts, of which it's getting to 10 gigawatt hours in terms of duration. I think it's just over 10 gigawatt hours. ERCOT is over, I think now 20 gigawatt hours. And so really we're seeing these big scales coming through in the space. So that's kind of point one. Just if you're thinking about the battery system as a whole, scale is one of the big things that's changed quite a lot.
Yeah, and I think that's quite useful to reflect, because in some ways, perhaps in the grid world, we see the ambition just constantly go up and up and up. And, and sometimes that can be driven from a purely financial rather than engineering. Well, if I'm going to pay this much for my grid connection, can I kind of max it out? Can I build the biggest thing possible? Sometimes we're sitting there as engineers going, bigger isn't necessarily better, but maybe in the battery world, actually, that has proved to be the case from a kind of financial perspective, that those who can pull off the really big schemes, there's a market attraction to do so. Definitely,
and you can do it all in one go. So there are definitely benefits to looking at some of those bigger sites. We also see there are some sort of traditional rules that exist in things like balancing code, which isn't very exciting. But
no, we love codes. We love codes.
Yeah. Some people love balancing codes, so I'm just going to have to be very careful here. But there are some balancing codes, and it's a little bit dry, but there are some that limit how some larger units can operate. For me, I think that will probably change. I think we'll look at reforming some of that, and really where that will come from is, how can we get the most out of these systems that we're installing? Does it make sense to have a semi-antiquated rule in place to limit how some of these assets can trade? No, I don't think so. I don't think consumers should have to pay for us having old rules. So a big fan of codes, but a big fan of codes that are up to date.
Yeah, okay, yeah. No, that sounds good. Okay, so we've had sort of growth in terms of like the scale, or any other kind of trends in terms of the changes, the way batteries are sort of used and services they access?
Definitely. So I think we should talk about maturity, and this isn't talking about scale, but this is kind of how they're being used. So the first thing to say is that when batteries come onto a system, because they react very quickly, the first thing they do is often frequency response. So depending on which grid you're in, you try and keep, let's say, grid frequency at 50 hertz. As frequency moves around that, essentially batteries act like a rubber band to bring that frequency back to 50 hertz. That's essentially one of the ancillary services that they do, and it's one of the first things that batteries do in nearly all markets. The great news for consumers is that used to cost quite a lot of money to get gas to do that, because it's quite expensive to get these big thermal units to react really quickly. And so batteries coming in and doing that has been a significant cost reduction for consumers. And it also puts less wear and tear on gas. So they don't have to run at, the way they used to do it was they used to sort of, instead of running at their maximum power, they'd kind of sort of like half go on the throttle essentially, and then have flexibility to go around. Now they don't need to do that. They can run at sort of full whack if they want to. And so that obviously has efficiency benefits for them. Batteries have come in and done those frequency response markets. If I just take GB as an example, we need about 2 gigs to do frequency response. We've now got 6. So that market is now what we would call saturated. And so batteries then go and look for the next most interesting thing. That next most interesting thing is wholesale trading. So buying low when energy is cheap and then selling when energy is high. Again, that's kind of good for 2 things. So one, it sort of helps us get more from, say, excess solar or excess wind, and it also helps us reduce the sort of peak stress on the system. So essentially, perhaps to stretch the analogy of the elastic band, it's then kind of trying to bring those prices closer to each other all of the time. The reason why this is kind of a maturity thing is that in those first instances, when you come into a small market like ancillary services, you can get kind of revenue levels that bounce around quite a lot. And often you get paid quite a lot to sort of displace gas in those first instances. Actually, as we move into wholesale trading, that's a much more mature market with a much more depth. And so it's something that big investors can get more confident in. So we're now seeing we're going from those early megawatts where it was evangelists and enthusiasts building batteries, now going into this world where those groups don't quite have the depth of pocket to build out some of these units. So we're seeing big utilities coming into the space, big institutional investors, national wealth funds coming in to take on these projects. And they are not talking in sort of 100,000 here and 100,000 there. It is, okay, we've got $500 million to deploy. Yeah. And so we look at, just to give you kind of the rough numbers of that. So we think we need about 50 gigs of batteries in GB by 2050. That's about 25 billion. Enthusiasts and evangelists don't have that, but big infrastructure capital does. And so that's another sort of key trend we're seeing, which is the sort of people providing the oil that greases the wheels of this are moving towards those bigger institutions and more mature players.
And is that, I mean, because I think it's probably fair to say, perhaps from the kind of external perspective, we'd almost seen batteries have a bit of a rocky road, perhaps transitioning from, I want a kind of, I'm just going to do frequency response, or I'm very focused on these ancillary services, those prices coming down, and people sort of thinking, well, actually, okay, what am I going to build my battery project to do? What is my revenue? Has that now stabilised? Is that what you're effectively seeing?
Yeah, exactly. And really, it's now sort of on an upward trend. Mostly that upward trend is being driven by fewer gas run hours, more solar, more wind, creating negative prices or £0 price intervals. And it's also things like technological updates in control rooms. So making sure that we are essentially getting the most out of the flexibility we have. To give the example in GB, there's something called the Open Balancing Programme, which runs for 4 years and is essentially a long programme of trying to get more out of those battery systems. That is on its way. It is partially successful. I think NESO, our system operator, would say that it's not fully successful, and there's still more work to do. And that's great. That's exactly the work we should be doing.
Yeah, to make sure that the assets that are actually built are utilised, right? Because, if I pay my bills, I want to make sure that the controller room actually made the most cost-effective decision, as opposed to, perhaps the historically easy one.
Exactly. So we are definitely moving in the right direction. And to tie this all back in, I think that if you're now an institutional investor, you can get a lot of confidence that the system operator is moving in the right direction. Things are very transparent, and we're now starting to see those improvements in revenues coming through. So again, that's sort of part of the reason that the whole sector is maturing. Okay.
And then I suppose one of the things I was quite interested in, is that kind of a good sort of overview of where we are now?
I think I'd add one more thing. This is like a pet gripe, that everything in energy world gets a little bit subsidised, and so we have capacity market contracts for gas units. Mostly we have contracts for difference for renewables, and then we also have renewable obligation and feed-in tariff as well, so old subsidy schemes. And sometimes when we talk about batteries publicly, somebody says, "Oh, you're just mining subsidies." And so I looked up the numbers the other day, just for a reference point. So I think I went back to 2014 and looked at the subsidies given to wind, solar, gas, and batteries. Essentially anything that's been subsidised by these main schemes. What percentage? Yeah, this is an unfair question. What percentage do you think batteries are of that subsidy?
Well, I suppose batteries would only really have gone into kind of the capacity market. 2%.
I think that's an excellent guess. So 0.5% of subsidy has gone to batteries. And I think that it's perhaps misleading because batteries really sort of only start to scale up in the last few years. But just to really highlight, there's a lot of money going to gas. There's a lot of money going to solar and wind. But actually to the thing that is really driving like how we do flexibility properly is not actually getting a subsidy payment really at all.
Okay, so yeah, so it is really quite an efficient solution.
Yeah, and we see that coming through in terms of then lower cost of bills, right? So that's why we get very excited about it.
Fantastic. And so I wanted to then say, because that does sound like quite a nice rosy position to be in. I suppose there are some pretty big changes coming forward. So, we talk lots about connections reform at the moment on this podcast. I guess one of the really headline items in connections reform was that we have a very, very large queue of batteries. NESO's numbers, when they came out with what they thought was needed for kind of the strategic alignment to Clean Power 2030, said we really don't think we need a lot of those numbers. I mean, out of interest, do you agree with those sort of?
We have a different number.
Okay. So, but effectively what we think that's going to mean is that there are a lot of battery projects that are not going to get a kind of a gate 2 connection offer. So we might see the pipeline of battery projects reduce. And I'm really interested in, does Modo are you modelling that at the moment? Are you thinking whether is it going to increase the value of the remaining projects?
So definitely we see this, right? So the projects that are going through that gate 2 process and that are protected, the 26 and 27 projects, we think those are definitely very valuable. If you then have projects which are in regions where it's not that oversupplied, but NESO and the Clean Power 2030 plan indicates that you need projects in those regions, again, you should feel quite confident. I would really sort of flag to people that if there's a need for 5 gigawatts of batteries in that region and you're the 10th gigawatt of battery in that region, there should be a warning sign going on that actually, even though, yes, we need more batteries, there's a very large potential that you could get given a very long date for your connection.
Even if you're protected.
Even if you're protected, right? And so there is going to be this in the start of next year when people start to get connection offers coming through, and that will take about 6 months. And I always hate to put a date on a sort of a thing which is kind of centrally governed because without fail, it will get expanded. But the point is that some of those sites will hold their value really well and some will be worth not very much. And so that was even sort of explicitly written in the impact assessment of the work in connections reform, that a lot of the development would essentially be wiped off in terms of value. And so there is this kind of rocky road coming ahead for some of those groups. Now, on the whole, for GB, I think some of those sites might then get picked up with people who want to take on a little bit of risk. And maybe this is kind of where I'll come back to your question around the forecast. So Clean Power 2030 asks for something like 27 gigs in the top end of storage.
Including what we currently have. So that includes that, the 6 gigs we currently got, yeah.
Absolutely, which we think is really ambitious by 2030, but all of the stuff in Clean Power 2030 is really ambitious. So we don't think we're going to get to that number of 27 gigs by 2030. And that's no problem. Like, it's really ambitious. We think we'll get sort of on the way to it. So around the 20 gig number. What's really interesting about the connections reform and the strategic spatial energy plan that sort of is the thing that follows it is that they don't see a huge amount of additional batteries coming on. So they see some, but we're sort of early 30s possibly. And we're sort of torn between two things. One hand, we say the central planning authorities are correct and they know everything. They are sort of omnipotent and we must always trust them. And therefore the number will be whatever they say. That's one way of forecasting. Another way of forecasting is to say, we are going to look at the markets and we're going to look at the shape of power prices and we're going to look at what we think batteries cost. And we're going to say, well, look, if this battery makes enough money to get an investor excited, are people going to want to build it? Generally speaking, if that battery is making enough money to get an investor excited, it's doing that because it is kicking other things out of the market. So it's undercutting a gas unit, or it is being is the best place to put your energy in the middle of the day. And so when we do that maths, we get to a number that's more like 55 gigawatts of batteries on the system. That is not huge in the context of what China can produce and what gets produced globally. But it is a big increase from where we are in connections reform and SSEP. And I think the one thing I would say about this is that I would probably welcome that. So this is a totally unfair stat, but I'm going to say it anyway. If you go back in time and look at some of the FES, so the future energy scenario modelling that is done, this is This isn't central planning, but this is essentially a view from a central body in terms of what that might look like. In some scenarios, you have things like coal and CCS, so carbon capture storage on coal, that from those plans in, say, 2015 should have gone live. That coal CCS should have gone live in 2025. And the reality is we've closed coal and no CCS is really there. So that, it sounds like a bad stat. Actually, I think that is the system working really, really well, which is I hope that in connections reform and in SCP, there is a willingness to recognise that you don't have all of the stats and that you're almost certainly wrong with what you're putting onto the system. That should be absolutely welcomed. The worst case would be, no, we're absolutely right. We're definitely going to be correct. The best case would be, we know this is going to be wrong. And so we're happy to build in some attrition. We're happy to move around pots. If we say that we're going to get 10 gigs of technology X, and actually that technology X doesn't turn up, okay, we've got this technology Y that is sort of getting to its limits and is actually delivering and is doing a really good job. So we're going to sort of tweak our numbers a little bit and have some flexibility. So I really hope that SCP takes that into account, and then tying that back into the point around some sites not being worth very much. I do think some sites will initially not be worth very much, but if this does come to pass, that people change where the volumes are and how much we want of certain technologies, then some of those sites will have some enduring value.
Yeah, okay. I think that's, I suppose, and we see that it kind of in a lot of the discussions around, how connections reform and the new kind of gated grid process might work in the future, right? So we're acknowledging there are going to be some hurdles people have to pass, and we want to make sure that the door isn't just closed to technologies. We don't want investors sat the other side of that door saying, I'd really love to build this battery project. I think it would make me money, but I can't physically get a grid connection.
Thank you for listening so far. If insights like these are valuable in your work, then feel free to subscribe and stay current as Britain's connections landscape continues to evolve. Now, back to the Connectologists.
I had a question for you on connections reform, and this is so we see a lot of it sort of being squeezed into the start of next year, right? So we've got a lot of these connection offers should come out early next year. I think at that point there's going to be this real sort of wave of projects that are all trying to get things accelerated all at the same time. Do you think that that is going to be a successful process? And given that some of those connection offers then come with capital requirements, do you think that people are actually sort of aware that they've got these kind of big cash bills coming through?
Yeah, I think that's a really pertinent question, because actually over the last couple of months, I think two realisations have hit. One, some of those offers are landing much later than people were hoping they would. So we've seen a delay of the programme. What that really does is it concertinas everything up. So actually projects with 2026 connection dates, 2027 connection dates, they have been sat on ice. They haven't been able to make investment decisions, procure equipment. So they might be getting an offer which, they'll almost certainly be accepting, but they're still looking at it and thinking, I can't make that date anymore. So actually there's going to need to be a bit of a rationalisation process. And I think we really just in the last sort of week or so, NESO and the TOs have really said, actually, we've now begun to open our eyes to this, and we're going to have pragmatic conversations about connection dates and things. And that's good. But what it means actually is that some of those projects will roll on to 2028, even 2029. And we're now, again, that concertina effect, we're bunching up, we're potentially sort of stealing some of the resource, commissioning resource from 2028, 2029 projects. So I think, no one likes the idea that you're going to have a mass build out of everything needed for 2030 in 2029 and 2030. That doesn't really.
And what about the cash side? What about the potential for large liabilities to sort of come due?
I think that is also people are more aware of that, because I think, the grid kind of securities and grid liabilities have been frozen for a long time. We've had quite a lot of recent discussion about when they're going to become unfrozen, and there is now clarity. They will become unfrozen when you get your gate 2 offer. So accepting that, you're going to be sort of paying on the bottom line. There are a few people who are going to have, really bad news stories, and those are people whose connection dates have been moved forwards but aren't achievable, but they will be asked to be signing on the bottom line of a liability based on a connection date imminently. So liabilities ramp up as you get close to your connection dates. So that could be quite problematic. And then customers who have kind of hybrid sites with different technologies, including final demand. Demand has very different liabilities, much higher. So people who are looking at data centres, for example, they were all hoping there's a code modification coming through to rationalise those charges in line with generation. They were all hoping that would be done and dusted by the time they got their Gate 2 offer. And to give you an idea, typically speaking, liabilities upon acceptance of an offer, even if you're only a couple of years out, don't tend to be more than sort of, £10 million. For a demand customer, that could be hundreds.
Okay.
So sometimes it is a bonkers number. And those issues won't be fixed when Gate 2 offers come out. So there will be some people who are sitting there with an offer they would like to accept and are financially unable to, potentially.
Okay, very interesting. And let me quote a Connectology episode back to you, which is there's more accepted offers in the demand side than there is peak demand on the system today.
By almost a factor of 2.
That's just a crazy stat.
Yeah, I think it's, I think there is there's been a letter out, I guess we don't want to turn this into a demand podcast, but there's been a letter out from Ofgem just reflecting that this week, that actually we potentially need some kind of needed test associated with demand as well, because that queue is unrealistic.
Agree, but the system is desperate for demand. So this solves, we're going off on a huge tangent here. But the
tangents are creative.
Yes, of course. But the system really needs demand. We are, when we think about the cost of electricity in this country, the ability to smooth out levies and costs of networks over more demand will be a massive help. The opposite, and this maybe gives it away, is the sort of utility death spiral, right? Which is the concept that essentially you try and recover the costs of a system or a utility over a diminishing demand portion. Costs get higher and higher and higher, which gives more incentives for people to leave the network.
Yeah.
So the opposite of the death spiral is what we're trying to get to, which should be quite obvious that it's a better place.
And the death spiral was a term specifically coined in Australia, wasn't it? I think.
I think so.
Yeah. For sort of network charging. Okay, so I suppose I think there is a bit of a rocky road ahead, and it's not totally clear how that will pan out for sort of Gate 2 schemes going forward. Some of them absolutely, will be given the kind of good news thereafter. They'll be in a position to kind of crack on. And I think for those projects, I'm quite interested to know, are those projects going to look the same as the battery projects we're building now? Because I guess from a technical perspective, there are kind of a few things changing at the moment. We've seen, I think, Zenobé's Black Hillock scheme, for example, as one of the first grid forming converters. Yep. We've seen kind of NESO be quite vocal about the fact that they would like kind of grid forming capability potentially to be mandatory. Is that something you're kind of modelling as well, because it opens up new services?
Yeah, well, I mean, that Zenobé project got into a Time magazine Innovation of the Year, so clearly it's going in the right direction. Definitely, we like to see more grid forming inverters coming through. It feels odd. I'm a battery person, sort of first and foremost, and when I talk about sort of the capabilities of grid forming side, really I'm not actually sort of hyping up batteries at all. I'm actually really just hyping up the inverter technology. Yeah. And so this always feels quite odd, but certainly we expect to see more grid forming inverters coming through. When we look at weaker grids globally, and so that's one of the nice things about my job is we have that breadth. When we look at global systems, for example, Australia, the number of grid forming inverters coming through is getting to sort of 50-50 with the grid following inverters.
Interesting.
So,
okay. Well, we're not quite there yet.
We're absolutely not there yet. So I would say historically it's all been grid following inverters. So they essentially will do, as the name suggests, they will follow what the grid does. And so they will try and replicate everything that comes through. In weaker grids, it's nice to have the sort of grid forming potential. And so you can then be setting a voltage level. So if you've got a voltage problem that exists on your system, then a grid forming inverter will be better for that. A grid following inverter can do a little bit, but not as much as a grid forming inverter. And so so that's very useful for Australia, which has a weak grid because it has a lot of solar and it is massive. If we look at grids like Spain have gone from not very much solar, let's say 5 gigs, to about 35 gigs in the last few years. And they have not really made any progress on the storage side. So on the storage side, their storage is in the sort of tens of megawatts. And that's a kind of classic case of they've moved forward very quickly, which is to be admired, but you also have to think about system stability at the same time. And so things like grid forming inverters on Spain is something that I think we should be very excited about.
Yeah, okay. And I suppose from not just a kind of, I guess, it's lovely to do this out of the goodness of our hearts and supporting great grids. But I think, from a commercial perspective, that kind of revenue stability is quite key. So obviously in the UK, we've got NESO's kind of, they've got their kind of long-term framework for stability services, for example, coming out now. Are there any other markets which offer alternatives? So I guess in stability, we sort of break down into kind of like inertia, so synthetic inertia, short circuit level contribution, remediation and restoration services, Black Start of old. Are there kind of equal appetites from best participants for all three?
Yeah, I would say there's a bit of a word of warning here. The first thing to say is that there's a really nice story within this, which is if you want to be providing, say, like an inertia type service, we had Daniel Duckwitz, who is one of the engineers who works with SMA make inverters, following and forming, and he was talking about sort of what the drain was on a battery when you were trying to provide an inertia type service, and that is sort of. People think that, that's going to be a big energy drain. You're going to have to use lots of your capacity to provide that service. In reality, if you want to respond to an event, it's 2.5 to 5 seconds worth of that battery's energy, which is nothing. So the nice part of the story is that essentially you could have a battery sat there at 0 megawatts, and provided you've got some small portion of energy left, you can kind of always be providing that service. And that's really nice. I think the word of warning that I would give to people is that this isn't a new panacea of additional value that's going to come flooding through. So when we look at these contracts, we look at the pathfinders, it's not like you're getting paid a huge amount of money. And maybe I'll just kind of put this into context. So if you want to build a new battery today, a 2-hour battery, maybe you're looking at 400k per megawatt to build the thing. And so you're trying to get revenues of, say, 80, 90k per megawatt per year in order to pay for that. So that sort of pays for the financing as well. For things like inertia, the early contracts looking at those services have been paying something like 10k per megawatt per year. Or for other services like voltage, it might even be lower than that. And so it's very, very unlikely that people will be building these units only for the purpose of inertia or voltage. Now, the great news is that storage can stack things. And so what storage assets will try and do is kind of stack these products together. I think the reason why I say that is because sometimes you see these things where people talk about, I'm going to build this thing for the purpose of just stability alone. And I would just say, well, yes, maybe, but and yes, the energy aspect works and the engineering works, but the commercials might be very difficult. And so I'd kind of always caution people to look at that.
I think that's really, great numbers and also really useful. Perhaps it paints a bit of a picture as to why we're currently where we are in terms of there not being a huge amount of grid forming inverters in the UK. Because I would say from a technical grid engineering perspective, there is a barrier there. There is additional work to do to both specify that inverter, to actually kind of test and prove its grid forming capabilities, and then the compliance process itself is again quite a lot more onerous. So are you making back your, is that 10k per year actually washing its face on that additional effort?
So I would say that is exactly right. So the cost of a grid forming inverter versus a grid following inverter is not that different in terms of the manufacturing process. Where the grid forming becomes more expensive is in the additional testing and work you have to do with grid to essentially make sure that that thing is doing what it's supposed to be doing. And so the additional cost on the inverter side is pretty minimal. So I think we are getting to this place where we're definitely going to have many more grid forming inverters. I think what I would say is that the best thing that could come out of NESO or any other system operator globally would be, what do we actually need? So how, in what locations do we need voltage? Do we need short circuit level or short circuit current? In what locations do we need kind of reactive power? If those things get really well described, it's then very easy for people to then say, okay, I've got a battery coming through, I can make a decision on grid forming or grid following. I could look at a synchronous compensator if I wanted to. There's kind of lots of options. As soon as the market is transparent and says what it actually needs, then we can start planning for that. That's really when we see this done well, I think that will be at the heart of it.
Yeah, okay. And I suppose that's in the kind of current world where it is still a user choice. You could still go grid following. Mm-hmm. And I think I'm thinking a few years ahead, if we end up with a system operator that says, actually, I just want to mandate everything to be grid forming, then perhaps there's a kind of a shared obligation to try and lower that bar, therefore, for things like performance testing and sort of acceptance testing. Hopefully, perhaps we can bring in some type testing for grid forming inverters that would lower the effort levels required. Otherwise, we're just increasing the cost of storage for everyone.
Yeah, you don't necessarily have to all have grid forming inverters, right? So if your grid is strong, it might make sense to have a blend of grid forming, grid following. It's not like this is the new technology that's going to solve everything, but it is a good step forward, and we should make the most of it.
It sounds like we maybe need a Modo Energy person on a grid work group for that code modification. I suppose, I mean, there are other, that's probably a couple of years off, maybe in terms of implementation. I know it's kind of the direction of travel NISO have sort of set themselves. There's been quite a number of sort of code changes, not such drastic ones, but code changes over the last few years aimed at batteries, either from a kind of technology side or an operations side. I think I'd asked you beforehand, Ed, whether you could do me sort of like some quick idiot guide summaries to things like GCO 166, which, well, in fact, I'm just going to ask you what it is.
Yeah, of course. So this is essentially... This actually isn't the first time we've looked at this. So the way that batteries used to work is that in the balancing mechanism, which is that sort of last hour before delivery, they would submit essentially their power to provide charging or discharging for 15 minutes, maximum of 15 minutes. Then we said that's probably not a very good idea because batteries are like 2 hours in duration. So why are we asking them for 15 minutes only? So we changed that 15-minute rule to a 30-minute rule. Exciting change. And so we go to 30-minute rules, and then batteries can be dispatched up to 30-minute rules. So now when you put a battery into the balancing mechanism, you have to say, this is the power that I can hold for 30 minutes. Fine. But if you haven't got very much energy left in your battery, you can't put in a very high offer because you can't hold that for 30 minutes. And so what GC166 is doing is saying, well, actually, why don't you just tell us how much energy you've got or the amount of discharge that you can provide or the amount of charge that you can provide. And once you've given us that, then we, NISO, we can just work
We can do the maths.
We can just do the maths, and that maths is not hard. The system, integrating into a system is really hard. So we've had the Ofgem decision. Ofgem have approved this, so it's going to go ahead. We've got something like 10 sites or optimizers that are going to be tested near term, and I think in a year's time, we're then going to have it working, provided everything's going well, we're then going to have it sort of fully working. If you've been able to follow what I've just said, like, it's very simple. Essentially, we're going, as a battery, if I'm a battery, I'm just telling you whether I can charge or discharge and how much for. It can't be hard maths, but it's the integration into the system and making sure that it's working well with all of those NISO processes that's the hard part.
And I guess what I was intrigued at was, is that going to change how batteries actually operate? Because perhaps, when we look at profiles of seeing how batteries operate, perhaps particularly sort of embedded batteries, so smaller scale batteries in distribution networks, we do see some fairly basic charging profiles, which, try and do things like optimize for the evening peak to allow them to discharge.
Yeah.
This is going to change how batteries in the BM operate, but is that going to mean that actually we see less kind of chunky half-hour profiles and we start to see more sort of, actually it's going to do this for 5 minutes because it could have a BM action that was only asked for 5 minutes?
Yeah, possibly. I think when people think about power markets, and particularly in the UK, everything's kind of national single price that is half hour in nature up until you get to the BM. And as soon as you get to the BM, you get locational pricing that is effectively nodal, and then you get dispatches that can be 1 minute long. And so you go from kind of the simplistic national version to the engineering and physics reality. And so the more that we can allow batteries to get into the engineering reality of how a system actually works, the better we can then dispatch those systems.
Yeah, fantastic. It'll be interesting to see what happens.
Yeah.
And so that was thank you, and thank you for satisfying my technical kind of curiosity on that one. I mean, is there anything else coming up, you think, in the kind of changes for batteries, either grid code or not? Perhaps looking forward to next year.
So I suppose the cat's already out the bag in terms of the thing that I quite like which is grid forming inverters. I think that's a really big change, and I think for some grids that's going to be a massive change. For example, just meaning that we have to run. Maybe I'll go back a step. In the wider energy transition, a lot of times people get sort of really hung up on looking at how do we get from 95% renewables to 100% renewables. That's really hard, and that means we have to look at some really odd technologies that are very expensive. We're not at 95% renewables, so I don't know why we spend so long looking at it. In fact, if that's really expensive, we might not even end up doing that, and we might end up spending that money in somewhere else that has a better carbon impact. And right now, let's say we're at 50% renewables, I'd much rather us look at how do we get from 50 to 65% renewables than look at 90 to 100%. And so the reason why I'm excited about something like grid forming inverters is that, let's say we've got a voltage problem on our network. Sometimes that means we call on a gas unit to run in the middle of summer, when from an energy perspective, we don't need them at all. But from a voltage perspective, we do need them. Well, if you've got grid forming inverters, if we have other things that provide voltage and can stabilize the network, then we don't need to call on that gas unit for a chunk of time in summer. Okay, that moves us from 50 to 52%. And so, well, I was going to answer this question and say the thing that I'm really excited about is grid forming inverters, and I think that is part of the reason why. I think we have a way of running this system better that can move us from 50% to 65%, and I think we should be really focusing as hard as possible on that rather than getting sort of bogged down in the 95 to 100%. Because for my money, and I don't think people really like this, but I think we're going to be running gas for a lot longer than we expected, partly because it's all paid for up front, and so I think we should probably be doing a lot of refurbs of the 35 gigs of gas that we've got, rather than trying to look for some very expensive solutions.
Okay, yeah. Well, I think the grid forming piece, yeah, we definitely see it as kind of key, because it's something that people are going to have to make decisions about now as they procure assets for projects which aren't going to get built out until 2027, 2028. So it does seem like, now is the moment. And I for one, am going to go and watch your SMA podcast, I think, on exactly what the kind of inverter manufacturers' take on this is.
Yeah, I mean, obviously they're bullish on it, right? I suppose
that's great. I can then hold them to that later. I can say, hang on a minute, on transmission, you said you could do this.
Yes, yeah, when you're having a supply chain conversation, you can drop that in. I think, but your general question was on the state of batteries. I think the big thing that's happened in the last year, and maybe the last 18 months, is just the cost decline. So to go into a really boring world of like financial modelling, just very temporarily, when you can take off something like 20 or 30% of the cost of the system up front, it matters less what's going on in the revenue world, because essentially the more you can get that cost down in that sort of first investment period, it is much easier to get projects to be over hurdle rates, which is the point at which a financier says, yes, I want to go and do this. So as much as I love to talk about the sort of geekery of like niche parts of the network, the blunt sort of force in the battery space has been that cost has just come down relentlessly. And that means that for many of these battery projects, it is a better decision to put them onto the system. And it's in part, to go back to an earlier part of our conversation, it's why it's really hard for NESO, because you're trying to make this forecast, but actually things aren't moving in a linear, slow way. Things are actually shifting in a way that not many people predicted. And so actually, it would be really good for them to have a sort of constant refresh of where the market is.
Yeah, and I suppose actually it's something we talk about a lot as well, but these big forecasting exercises, things like SSEP won't be any different. They take time and therefore they have to freeze their kind of input data assumptions at a point. Yeah. And we often see the results as an industry maybe a year later, and a lot of things can change in a year, 18 months. So I suppose that point about kind of, I guess, being transparent about the data assumptions and then refreshing them when they get outdated.
100%. No bad thing to be wrong.
Yeah. Okay, excellent. Fantastic. Well, Ed, I think we'll leave it there. That is an amazing amount of stuff that we've managed to cover and unpack. And I think the financial modelling will be very welcomed by lots of our listeners as well.
Oh, so it's exciting stuff.
It's exciting stuff. Well, apparently it's how people get paid. So thank you very much for coming. And we will see you on another episode of the Connectology podcast. Thank you.
Thanks for joining the Connectologists in this exploration. This knowledge sharing is made possible by the support of our clients. We thank them and hope it will help the whole of industry to connect society's critical infrastructure faster. If you found this useful, you're welcome to explore more free insights at roadnighttaylor.co.uk/Connectology, or click on the Insights tab at the top of our homepage.